Hello, my name is Jesse Colombo, and in this presentation I'm going to explain why a Chinese gold mania will soon drive gold to $3,000 an ounce and beyond. In March and April of this year, the price of gold surged by $400 an ounce or 23% in just 6 weeks. The surge caught practically everyone by surprise, especially because Western investors and traders were completely uninterested in gold and were far more excited by high-flying tech stocks and cryptocurrencies. After some investigation, it was revealed that gold's surge was almost entirely driven by Chinese futures traders on the Shanghai Futures Exchange and the Shanghai Gold Exchange. The Shanghai Futures Exchange gold futures, the chart you're viewing, served as the primary vehicle behind the gold frenzy in March and April, and that surge soon spilled over into the international gold price. A fascinating Financial Times article from April called Chinese Speculators Supercharge Gold Rally highlighted how trading volume in Shanghai gold futures had surged by 400%, propelling gold prices to record highs. The spring Chinese gold trading frenzy can also be seen in the chart of long open interest in Shanghai gold futures. Following the Chinese-driven gold frenzy in the spring, it was as if a switch flipped off on April 15th, leading Shanghai gold futures to trade sideways for 5 months. In a September 6th Substack article, I explained that the Shanghai gold futures were merely taking a pause, likely setting the stage for another surge like the one seen in the spring. I also noted that a decisive close above the 585 yuan resistance level would trigger a new rally in gold prices, not only in China but globally. As the chart shows, that's precisely what's happening. If you're enjoying this content so far, please consider subscribing to my newsletter that can be found in the description below. My newsletter features detailed analyses of precious metals and comprehensive reports about global economic risks, including dangerous bubbles that are ready to burst at any moment. As you can see from this chart, the international spot price of gold in US dollars traded in a choppy manner from April until mid-September, when it hit an inflection point and began climbing vigorously once again. This timing is no coincidence. It aligns with Shanghai gold futures breaking out of their trading range, drawing Chinese traders who are known for their strong affinity for gold back into the market. Technical analysis of Shanghai gold futures implies that the international gold price in US dollars should reach approximately $3,000 per ounce during the current rally. This projection relies on the concept of a measured move, where the price following a consolidation pattern or trading range is expected to rise by the same number of points as the rally preceding the consolidation. This diagram illustrates how measured moves work. The chart of Shanghai gold futures shows a 105 yuan per gram rally in the spring, followed by a 5-month trading range. This suggests that the current rally should also reach 105 yuan per gram, projecting a target of 690 yuan per gram or roughly $3,000 an ounce. This target is also logical because $3,000 is a significant psychological level, and major levels like that typically act like a magnet for prices. And in case $3,000 seems ambitious, it's only a 9.3% increase from current levels. I'm confident that gold will climb even higher in the course of this bull market, though it may pause or consolidate around the $3,000 level for a time to catch its breath. Gold analysts and investors who closely follow developments in China often monitor whether the domestic Chinese gold price trades at a premium or discount compared to the international price. In recent months, China's domestic gold price experienced an unusual discount of up to $40.60 against the international price. This discount has quickly reversed following the breakout in Shanghai gold futures, however, with Chinese gold now trading at a $1.10 premium over the international price. This transition from a discount to a premium is an indication that gold trading activity in China is starting to heat up once again. Another sign that gold trading activity in China is heating up is the recent increase in Shanghai gold futures trading volume over the past few months. As seen in the chart, volume surged dramatically during the spring rally. While trading activity is currently rising in a measured and orderly way, I expect it to ramp up significantly as the rally progresses toward $3,000. That's when the real frenzy in Chinese gold trading will likely begin in earnest. Despite rising gold prices and increased trading activity, the high cost of gold has actually dampened physical consumer demand in China. According to Bloomberg, overall demand fell 22% to 218 tons in the 3 months leading to September. Jewelry consumption dropped 29% to 130 tons, while bar and coin purchases declined 9% to 69 tons. This suggests that the rapid price surge has created sticker shock for many Chinese consumers who are likely waiting for a price dip to buy at more favorable levels. The reality is that high gold prices are here to stay, however, with even further increases ahead as global debt, money supply, and inflation continue to rise. Soon, possibly during the intense frenzy phase I mentioned, physical gold buyers may recognize that prices aren't dropping and, driven by the fear of missing out, start buying aggressively before prices climb even higher. This shift in behavior will only add more fuel to the fire. Another factor supporting the bullish outlook for gold in China is the country's struggling economy, which is weighed down by the collapse of massive bubbles in real estate and the stock market. In response, the Chinese government recently announced a plan to issue special sovereign bonds totaling approximately 2 trillion yuan or 284 billion US dollars this year as part of a new fiscal stimulus. Fiscal and monetary stimulus programs are typically bullish for gold because they add to national debt, debase the currency, and drive inflation higher. Burdened by a substantial overhang of bad debt, inflated asset prices, zombie companies, and a rapidly aging population, China is now on a path toward an addiction to stimulus to keep its economy afloat, much like the United States, Europe, and Japan. The stage is set for Chinese traders to continue fueling a powerful rally in gold prices, pushing gold to $3,000 an ounce and then beyond. Now that Shanghai gold futures have broken out and trading activity is heating up once again, all indicators point toward a renewed surge that could mirror or even surpass the intensity of the spring rally. China's economic struggles and increasing reliance on stimulus add further support to the bullish outlook for gold. Chinese physical gold investors and consumers are likely to return in droves once they recognize that high gold prices are here to stay, creating the conditions for an explosive phase in the gold market. If you enjoyed this presentation, please hit the subscribe button below and like this video. Also consider subscribing to my newsletter that can be found in the link in the description below. Once again, I'm Jesse Colombo and thanks for watching.